Right now, more than $200 is quietly disappearing from your Social Security check every single month, and there is a very real chance you don't have to pay a dime of it. Stick with me because this is going to take about 15 minutes, and real quick, before we go further, this is general information based on current federal rules, not personal advice for your specific situation. Now let's get into surprise number one, because this one alone could be worth close to $2,500 a year. That's not a typo, that's a real number, and I'm going to show you exactly where it comes from. Here's the situation. If you're on Medicare, Part B comes out of your Social Security check automatically before you ever see the money. In 2026, the standard premium for that is $202.90 a month. Added up over 12 months, and that's $2,434.80 a year gone from your check before it even lands in your account. Most people just accept that as the cost of being on Medicare. They shrug, they figure everybody pays it, and they move on with their month. What almost nobody tells them is that there are federal programs specifically designed to have the state pay that premium for you instead. Not lower it, pay it, which means that $200 some stops disappearing and your Social Security check gets bigger by that exact amount every single month for as long as you qualify. And it doesn't stop with the premium. Depending on which version of the program you land in, it can also wipe out your deductibles and your copays. So the surprise bill that shows up 2 weeks after a doctor's visit simply stops existing. On top of that, there's a separate program that helps with your heating and cooling bill, paid straight to your utility company, so you never even have to touch the money. And there's a third one, a genuine second monthly check, completely separate from your Social Security, that a huge number of retirees are convinced they can't get because they already receive Social Security. That assumption is wrong, and I'm going to show you exactly why in a few minutes. Here's why I'm bringing this to you specifically. This channel exists to go through IRS rules, Social Security rules, and Medicare rules line by line in plain English, so you don't have to dig through government paperwork to find out what's actually yours. These particular programs come from the Social Security Act and from federal Medicaid law, and they're administered jointly by the Social Security Administration and each state's Medicaid office. According to the Centers for Medicare and Medicaid Services, or CMS, the rules for who qualifies are updated every single year, tied to the federal poverty level. That means the income line that disqualified you last year, or 3 years ago, or 5 years ago, may not be the line anymore. The number moves. And when the number moves, people who were $40 over the limit last year can be sitting comfortably under it this year without changing one single thing about their life. Let's go through this piece by piece, starting with the one that touches almost every single person watching this video right now, your Medicare Part B premium. Number one, the program is called the Qualified Medicare Beneficiary Program, or QMB for short, and it is the most generous version of what's known as a Medicare Savings Program. If your monthly income is at or below $1,350 as a single person, or $1,824 as a married couple, and that's the 2026 federal figure for most states, QMB doesn't just pay your Part B premium, it pays your Part A premium too, if you happen to owe one. And here's the part that changes people's lives the most. Federal law prohibits any Medicare provider from billing a QMB enrollee for deductibles, copayments, or coinsurance. Not reduces it, prohibits it. So if you've been quietly paying $20 here and $40 there every time you see a specialist, and it turns out you qualify for QMB, those bills are supposed to stop entirely by law. The resource limit that goes along with this is $9,950 for a single person and $14,910 for a couple. And that does not include your home or your car. Most retirees do one thing wrong here. They see the words resource limit and they assume their modest savings account or their paid off house disqualifies them automatically. It usually doesn't. Go check the actual number before you rule yourself out at your own kitchen table. Now here's where it gets important, because QMB isn't the only door. If your income is a little too high for QMB, there's a second program waiting for you. Number two, it's called the Specified Low Income Medicare Beneficiary Program, or SLMB. The 2026 income limit here is $1,616 a month for a single person and $2,184 for a couple. SLMB doesn't touch your deductibles or your copays the way QMB does, but it covers one thing completely, your Part B premium. That's the full $202.90 a month every single month, which comes out to that $2,434.80 a year I mentioned at the start. The resource limits are the same as QMB, $9,950 single, $14,910 married. Here's the mistake people make with SLMB specifically. They call their state office, get told they're a little over the QMB line, and hang up thinking that's the end of the conversation. It isn't. Ask specifically about SLMB. It's a completely separate eligibility tier with a higher income ceiling, and the person on the phone won't always volunteer it unless you ask. Most people stop here, but don't, because there's a third door, and it's the one almost nobody has ever heard of. Number 3, it's called the Qualifying Individual Program, or QI. The income limit climbs again to $1,816 a month for a single person and $2,455 for a couple in 2026. Like SLMB, it covers your Part B premium in full. The catch with QI, and I want to be straight with you about this, is that it's funded through a capped federal grant, which means it operates on a first-come, first-served basis each year. If you think you might land in this range, don't sit on it. Apply early in the year rather than waiting until December, because the money for QI can run out before the year does. The resource limits match the other 2 programs. Here's the part they never tell you about any of these 3 programs. The moment you're approved for QMB, SLMB, or QI, you are automatically enrolled in something called Extra Help, which is a separate federal program that slashes what you pay for Part D prescription drug coverage. In 2026, Extra Help means no Part D premium, no annual deductible, and co-payments of roughly $5.10 for generic drugs and $12.65 for brand name drugs, no matter what they'd normally cost. You don't fill out a second application for this. It happens automatically the moment your Medicare Savings Program is approved. A lot of people qualify for a Medicare Savings Program, get the Part B premium taken care of, and never realize their prescription costs just dropped too, because nobody connected the dots for them. Let me put a face on this so the numbers actually land. Picture a retired woman, 69 years old, living alone on a modest Social Security check. Every month, $202.90 came out before she ever saw a dime. She always assumed programs like this were for people much poorer than her, people on Medicaid, not people who'd worked their whole life and had a small nest egg in the bank. When she finally called her state's Medicaid office and gave them her actual monthly income, she came in at $1,500 a month, too high for QMB. But SLMB's limit was $1,616. She qualified. Her Part B premium disappeared. Her Social Security check grew by $202 a month, and a few weeks later, a letter arrived saying her prescription drug copays had dropped as well, because Extra Help had kicked in automatically. Nothing about her life changed except that somebody finally told her the door was open. How do you actually apply for a Medicare Savings Program? You contact your state Medicaid office, or you call your local state health insurance assistance program, which almost everyone just calls SHIP. It is completely free. Nobody legitimate will ever ask you for a fee to apply for this. You don't need to know which of the 3 tiers you fit into before you call. You simply say, I'm on Medicare, I'm on a fixed income, and I want to know if I qualify for help with my Part B premium. That single sentence is enough. They'll ask about your income, run the numbers, and tell you exactly where you land. Now let's shift to the second program, because this one hits a bill that punishes almost every retiree twice a year, once in the deep of winter and once in the middle of summer. Number 4, it's called the Low Income Home Energy Assistance Program, LIHEAP for short, and it's a federally funded, state-administered program that helps cover your heating and cooling costs. Most states set the income limit at around 150% of the federal poverty level, though several states allow more. And the exact dollar figure depends on your household size and where you live. This is one where you genuinely have to check your own state's number, because it varies more than the Medicare programs do. Depending on your state, your income, and your fuel type, the payment ranges anywhere from $200 up to around $1,000 a year in most states, with a handful of states going even higher. It's a grant, not a loan, and it is paid directly to your utility company or fuel provider. You never have to touch the money, and it never has to be paid back. Here's the part most people miss entirely. When they hear heating assistance, they picture a furnace in January and stop listening. But most state LIHEAP programs also cover cooling assistance for the summer months, which for a retiree in a heat wave isn't a luxury. It can be a genuine safety issue. And on top of the regular benefit, there's usually a separate crisis component. If you've gotten a shutoff notice or your furnace or air conditioner has failed completely, there's emergency funding specifically built for exactly that situation. And it's typically processed faster than the standard application. Here's the part I need to be straight with you about, because it's the reason to act now instead of later. LIHEAP funding is allocated to each state once a year, and once a state's allotment for the season runs out, that's it until the next funding cycle. States prioritize the households they consider most vulnerable, and retirees on a fixed income are almost always near the top of that priority list, but you have to actually be in the system to benefit from that priority. Applications in most states open in the fall or winter and can close as early as spring, so don't wait until the coldest week of the year to make the call. Picture a retired couple living on 2 modest Social Security checks, watching their gas bill climb every winter and quietly turning the thermostat down a few degrees to make the budget work. They'd never applied for any kind of assistance in their lives and assumed programs like this were for people in far worse shape than them. One phone call to their state's Energy Assistance Office later, a few $100s went straight to their utility account, and the crisis fund covered a furnace repair that had been limping along for 2 winters. The cold months stopped being something they dreaded. That money had been sitting there the entire time. Nobody had ever told them to ask for it. for it. How do you claim it? Contact your state's LIHEAP or Home Energy Assistance Office directly, or dial 211, which in most of the country is a free helpline that connects you straight to the office handling this in your area. It's free to apply, and once again, nobody legitimate will ever charge you a fee for this. Now here's the third piece, and for the right person, this is the biggest one of the three, because it isn't a bill being covered or a premium being waived, it's an entirely separate monthly check. Number 5, it's called Supplemental Security Income, or SSI. And I need you to hold two ideas apart in your head because this is exactly where people get it wrong most often. Social Security retirement benefits are what you earn by working and paying into the system for years. SSI is a completely different federal program run by the same agency for people who are 65 or older, or blind or disabled, and who have limited income and limited resources. Here is the single most expensive mistake retirees make with this program. They assume that because they already receive a Social Security check, they're automatically ineligible for SSI as well. That is not how it works. If your Social Security check is small, you can often receive SSI on top of it. One does not automatically cancel out the other. For 2026, following a 2.8% cost of living adjustment, the maximum federal SSI payment is $994 a month for an individual and $1,491 a month for a couple where both spouses qualify. If you already have some Social Security income coming in, your SSI payment is typically reduced by a portion of that amount. Social Security counts as unearned income, and after a small general exclusion, it generally reduces your SSI dollar for dollar. But a reduced SSI check is not the same as no SSI check. Even a partial payment, sitting on top of a modest Social Security check every single month, can be the difference between a month that works and a month that doesn't. Over a full year, even a partial payment adds up to thousands of dollars you are not currently receiving. Here's the part they never tell you that eases the resource worry. SSI does look at your countable resources, and the limit is $2,000 for an individual and $3,000 for a couple. But your home does not count toward that limit, no matter what it's worth, as long as you live in it. Your car generally does not count either, so do not look at the house you own outright and disqualify yourself before you even make the call. This program was built precisely for the person who worked their whole life, receives a modest Social Security check, and is quietly coming up short at the end of every month. Think of a retired man, 71 years old, 30 plus years on the same job, a small pension that ran out years ago, and a Social Security check that stopped stretching to the end of the month a while back. He assumed SSI was strictly welfare for people who'd never worked and that he'd never qualify. He was wrong on both counts. A partial SSI payment landed on top of his Social Security, a few $100s a month, and for the first time in years, his monthly arithmetic actually worked. How do you claim it? You apply directly through the Social Security Administration, online at ssa.gov, by phone, or in person at your local Social Security office. It costs nothing to apply, and you never need to pay anyone to file this paperwork for you. Here's where it gets important, and I want you to really hear this part, because these three programs adjust every year with the cost of living adjustment and the federal poverty level. The line for who qualifies moves every single year too. If you checked 2 years ago or 5 years ago and got told you made $40 or $50 too much, that answer is out of date. The 2026 numbers moved upward across the board. The SSI payment increased, the Medicare Savings Program income limits increased, and the Part B premium itself increased. People who were just over the line last year can be comfortably under it this year without a single thing in their life changing. The only way to know is to check again. Now, the part I promised you at the start, because this is exactly the kind of money that draws scammers like nothing else. Here's how it typically works. Someone calls, claims to be from Medicare or Social Security, and says they can get your premium refunded or your new benefit started today. They just need you to confirm your bank account, your Social Security number, or your Medicare number over the phone. Stop right there and hang up. Medicare and Social Security do not place unsolicited calls asking for that information in order to hand you money. If someone on the phone is rushing you and asking for your banking details to release a benefit, that is a thief, not the government. You always go to the source yourself, your state Medicaid office, your local SHIP counselor, or ssa.gov directly, and you never give your personal information to whoever called you first. Let me add all three of these together, because stacked side by side, the total number tends to land differently than any one piece on its own. Qualifying for a Medicare Savings Program can put roughly $2,435 a year back into your Social Security check. And in the most generous version, your deductibles and copays disappear on top of that. LIHEAP can add several hundred more dollars a year toward your heating and cooling, paid straight to your utility. And SSI, for the person who qualifies, can add close to $12,000 a year at the maximum, or a meaningful partial amount for almost everyone in between. None of that is charity, and none of it is a loophole. It's federal law, sitting there waiting for the paperwork. So here's your one action step for this week. Pick up the phone and call your state's Medicaid office or your local state health insurance assistance program. You can find the number by searching SHIP plus the name of your state and ask this exact question. Based on my monthly income, do I qualify for a Medicare Savings Program? And can you also check my eligibility for SSI and LIHEAP while I have you on the phone? One phone call, 3 programs checked at once, and it costs you nothing but about 20 minutes. If this saved you money, or if it might save someone you love money, share it with them. And subscribe for a new video on the Social Security and Medicare rules that actually affect your check every single week.